Okay, good morning, good afternoon, everyone. Welcome. A little bit later start today. We'll just give a few minutes for a few more people to join in, and then we'll just get started and start running through some of these charts. Let me get a sound check. Can everyone hear me okay? If you guys can hear me, go ahead and leave a thumbs up or leave something in the comment. Okay, cool. I'm seeing the comments now coming in, so it sounds like my audio is good. We'll just get started here in just a few minutes. Hope everyone had a great week. In general, my trading this week was actually not too bad, even though the market was going up. A lot of the stocks, a lot of the shorts that I've been pointing out are still hanging in there, still technically set up to do what they are telling me they're going to do. No technical damage done on a lot of those. And then those gold miners that I've been loading up on for the last couple of weeks are all starting to really perform now. So that's kind of how it works, typically with this trading style and this trading strategy that I, really teach and show. It's, it's not a momentum strategy. So typically you're not buying something when it's ripping higher, hoping that it rips even higher. It's really more about seeing that reversal, seeing that point where a chart is about to change trend and then getting positioned before the momentum shows up. And usually when that momentum shows up, we're going to run up right up to our profit targets and take profit into that. So that's really kind of how that works. And just like the oil stocks back in January and February when nobody really wanted them because, fundamentally, everybody was making a case fundamentally based on the fact that the president was going to be potentially hostile to oil companies. But technically everything was set up. So, and they've all, obviously they've all run, pretty well. And that's the nature of this. That's the nature of this trading style. HYG. All right, well, let's go ahead and get started. I'll start just to give you guys a preface of how we do things. So leave a comment. Try not to overwhelm me with comments so that I can actually get to some of these questions. But obviously, I do read through these comments as we're going along. If you have a stock you want me to look at, if you have a trade set up, or if you have a stock you want me to look at and maybe you see a trade setup, give me a little idea of what you're looking at and what trade setup you think you see, and I'll look at that. And again, everything in here is just my opinion, and it's not financial advice of any sort. So let's get started. I'll just start at the top, and we will get going. So we've got yep. The upper trend line on the SPY, I just extended that out. I had that one, I was looking at that just today because we've obviously started to break a little higher. And basically, this is the the price channel, the upper price channel. And the upper trend line right there seems to be a valid resistance line. So I just extended it out, basically right there. It was sitting right around here. And the SPY, you can see, pretty strong week on the SPY. So, there's no real way to read that as bearish in the short term. We're going to get some sort of a blow off top where we just, go higher for a couple weeks or months. There's no way to really know. I'm not really interested in being long this market. I think it would be full. I mean, from my perspective, to be long this market is kind of counter to my trading style. That would be buying, momentum as it rises higher, hoping it goes even higher. And I really look to buy, I look to sell, really I'm looking to sell tops and I'm looking to buy bottoms at the end of the day. You don't always get the top, but you look for signs that a top's being put in, and then you can stage your positions. So yeah, I mean, obviously there's lots of money printing and all that, but that I don't think that's going to stop the market. I think, a counter argument to someone that says don't fight the Fed on money would be, okay, that's very true, but if you look at the bond market's likely not going to just sit there and take, money printing like crazy and inflation happening, and then they're just going to sit in their bonds and lose money. So that's what we started to see a little bit of. If we look at TLT, we're seeing interest rates. We were seeing interest rates fall. I mean, this is a massive move right here in the bond market, the long bond. If you roll back and look at some of these moves, these are about as big as the moves get over the years. This is going back to 2011, and we're looking at a weekly chart. So it's a good size move. And, if we see another one of these moves to the downside, again, that's the bond market saying, you can print all you want, but we're not going to sit in our bonds and just get our value inflated. And there's a lot of money in the bond market. So, the things we have to look for. The bond market ultimately is probably going to control the Fed. They usually do. So, if the Fed might not have the ability to continue to print money if the bond market says they're not cool with it. That's just fundamental stuff. All right, getting into these charts. HYG. All right, what is that? That's bonds, right? That's a high yield. So this is this junk bonds? High yield. That's junk bonds, right? I think HYG and JNK are kind of the same. Yeah. Okay, HYG is going to be junk bonds. Obviously, you're going to get a dividend out of those, 4%. Looking at the chart here on HYG, again, I like to start with the daily. Let me see if I can see anything that's interesting. No negative divergence, really, just downward momentum in the short term. You can see here on the RSI, you've got downward momentum. And the PPO, it's pretty obvious, downward momentum. But you also have downward price action too. So until you run up and make a new high, if you run up and make a new high and this still is sloping downward, then you'll start to, you could start to put in that negative divergence. But as of right now, this is telling me downward price with a counter trend bounce, downward trend in momentum. And looking at that, on the daily, well, we can go to the hourly. A little bit of a support line. Right in there. I mean, I wouldn't just want to load up on these things in hopes of collecting a dividend. These aren't safe, all right? These are going to trade like stocks. This is high yield corporate bonds, which is junk bonds, basically. These trade more like a stock with like a risk asset, not like a, you can't compare this to cash. So yeah, as far as I can tell with the trend, maybe we just broke this trend right here and we're going to make another leg lower. Moving on. Silvercrest Metals. That's the Toronto Stock Exchange. So I do, I'm not able to trade the TSX directly. I do have a couple brokerage accounts where I could probably buy that, but I guess SILV. In general, I prefer to trade the gold mining stocks over the direct silver plays. For me, I'd rather lever up. The silver miners are erratic in general. They can shoot to the moon straight up and they can crash straight down. The gold miners are, I feel like a little bit softer of a play. So that's usually why I chart the gold miners. Silver also, I mean, in general, silver should track with what gold does. So I think you really want to just be able to, chart the metal, chart bullion, chart the metal. The miners will trend with the metal. They might not trend at the exact same time, but in general, they're going to trend, and they're going to trend more. They're going to trend with leverage. And silver might trend even more than that. But I prefer to just take larger positions in gold miners. This one, though, since you're on my live stream, we'll go ahead and track it out. That's what I got. All right. So you throw this out. The reason why you throw this out is this was a forced liquidation event. When COVID was happening and the miners are crashing, I was talking about the fact that these miners, they were forced liquidation. The brokers were selling they were liquidating people's mining positions to cover the losses and the margin calls on other positions, tech and whatnot. So that's what was happening, and that was a buying opportunity. I talked about it. I loaded up on the miners, and we rode that bounce up. So I throw that out because that's kind of it's an outlier. But this looks like a trend to me. You got a reaction there, reaction here. Broke trend here. As far as I can tell, we broke trend, and we broke. This silver pop. This was your. There's your negative divergence that you had in the past. But that pop right there, that was probably the GameStop mania thing that was going on. And then they were like, there was a silver squeeze. But that was a divergent high, and that failed. And so looks to me like we're below trend and back testing potentially. Not a fan, really, of this one. All right, moving on. KLAC. All right, if I don't have an opinion on a stock, I'll just tell you I don't have an opinion. So some of these that I've never heard of, I don't know what this one does, but looking at this, all right, so negative divergence. There it is right there. I mean, that's basically when it started to show up. See that high, the high in price right here? That's a divergent high on the RSI and on the PPO on the daily chart. So that typically cues me in that we're going to get a trend reversal. But again, a negative divergence isn't a reason to short a trade, and it's also not a reason to necessarily exit a long if you're long that thing. And again, we made another divergent high right here. Now this divergent high is not confirmed yet, because really what you'd want to see is this start to turn down like that, basically, and the PPO start to point down. If that starts to point down, then that's going to confirm that this is another divergent high. So we're building negative divergence in this chart. I don't like that. And so then you look for a trend line break. And this one, that's about as good as I can do it. It's not the cleanest because you have a couple, you have a violation right here, but brief violations of a trend are okay as long as, if you see just a brief violation, then you can get bear traps or stop raids around it. When everybody's watching a trend line, expect those kind of moves. So that's why usually you look for if you're looking for a breakdown, you want to see an impulsive breakdown where it's just obvious that this is not going to be a stop raid. If it's just a brief breakdown and it closes and the next day they ramp it up, that's a bear trap. And they're running stops. Market makers use technical analysis all the same, and they look to throw money around and run stops at certain levels. So that is kind of part of the game. There's the trend that I see. We have not broken trend. So this is bullish until it breaks this trend is what I would say. But it is putting in negative divergence. So that is telling me we're likely going to break trend. But until you see it, I wouldn't worry, although it could come all the way down to the trend. You don't know, or it could go higher. So again, this area right here, there's no action to take for me. I would maybe take profit if I was long. You could maybe take a little bit off. You don't have to take the whole thing off. It's always good to lock in some profit. And that's why I point on my trade ideas, I always point out profit target levels, because as we fall into those levels, I take profit into those levels. And then maybe I'll cycle back into the trade if you get a bounce off that level. But I'm always looking to lock in profit as I start to hit profit targets. That's key. All right, moving on. Just looking for ones that maybe are interesting. NNDM. These really low price stocks, I'm usually not, I try to steer clear of a lot of them. Some of them are okay, but again, usually the lower the price, position sizing is key, right? So if you have a low price, you don't want to load the boat on a highly volatile, low price stock. You want to taper down your position size a little bit. Adjust your risk according to volatility. All right, that's key. It's a easy way to make a lot of money, obviously, if you load up, but it's also an easy way to blow up your account. And this is a game of survival. On this one, just scanning a little bit. Yeah, I don't see clean negative divergence. Not good enough that I would want to take a trade on this one or a position. Obviously, you had an uptrend right there. That's a clean and clear uptrend. We broke that trend. There's a break. Little kickback rally. There's no bullish divergence. Usually what I look for to tell me that so the trend reversed obviously right here. This was your uptrend, then you started a downtrend. So I don't usually to say that this downtrend that started here is over, I typically start to look for bullish divergences. And maybe you have it because you're making an equal low in price right here and it's slightly higher, but it's not that distinct. So I wouldn't feel confident saying that we have bullish divergence, and I could easily see us going lower. We haven't even tagged the 200-day. I'd put higher probability you're going to at least tag that 200-day down here. Maybe you put in bullish divergence when that happens. Moving on. Okay, I'm just scanning the pot stocks, MJ. These typically are momentum stocks, so you usually only hear about these things when they've just ran like 100 or 200% and then everybody jumps on board. That's typically how these things work. You can clearly see, this thing's had a massive run up from the lows. Well, there's the March, there's the COVID drop, from the lows, up 283%. It's a pretty strong run in a pretty short period of time. Looking at this, you don't have negative divergence. You made a high here on a high of momentum, but there's no negative divergence. You haven't made a new high on less momentum. So I wouldn't short this, let's put it that way. It does look like it's kind of building a support zone somewhere right in here. Triangle, potentially. Yeah. Maybe a potential triangle, and you look for which way it breaks. You break up, it's likely going to run higher. I don't know. I wouldn't short it. So if I'm not going to short it, then you could be long, I guess. I wouldn't be long either on this one, but I'd look for something with a better setup. It's just it could work out to the upside. Not a clean short though. So that's all I have to say about that. Yep, SPY is way over pre-pandemic. That's right. Yep. A lot of it's inflation. I mean, that's the reality. You look at the dollar. The dollar's just been dropping since the Fed came out. And, that's just the reality. Energy. So XLE, obviously, is energy. And, I think energy's got I think energy's going to drop a little bit more. We had negative divergence. We've started the downtrend. I don't see that. yeah, we could make another new high and put in another divergent high. That's possible. So what I would do, because you're right here, like we got some support right in here. That's that former high. I might be off just slightly. Let me look at that. Just slight, maybe off just slightly, but it's close enough. So I would just, I would just wait to see if we break that. If you break that, I think we go lower. And that level's right about $47. You break that, I think you're heading down to, well, I think we're heading down to right here, 42. And that's that. We've had several reactions around that 42 level. So I think if we break, sorry, the lines have to catch up. But we break 47, I think 42. 42 might be the area that's interesting as a buyer. You don't break it and we can hold. Maybe we continue higher. Hard to say. Yeah, the Fed has tools. Someone's responding about the Fed and the tools they have to bring down. Well, the Fed has the tools. They can raise interest rates. They have that within their power. It just, what will the effect be? Well, we obviously all know that it's going to be detrimental to, real estate and stocks. So they're likely to not do that, but they might try. You never know if inflation starts to run hot like they want it to and like everybody's saying it's going to, then how does the economy really start to act? And the Fed's reactionary, so when trouble happens, they react. So until trouble happens, we don't know what they're going to do. But when that shows up and there's problems, maybe they do raise interest rates. Who knows? Bonds shifting to equities. I doubt it. I don't know. I don't think money's going to shift from bonds to equities. It's hard to say. I mean, equities are so overvalued. I mean, if you look at a lot of different indicators, and they're just like extremely overvalued. I mean, just take a look at the Buffett indicator, and it's just like out of control. So yeah, obviously, something can always go higher though. There's nothing to say it can't. But I think you're probably going to see. I think you're probably going to see some money flowing into bonds because they're returning, a higher yield than some of the other governments. But that doesn't mean, maybe we need higher interest rates for that money to flow in. I don't have a huge opinion on that. All right, I haven't looked at Snap and Tesla. Snap, I'm in a trade on Snap right now. I'm short this thing, and I've covered this in my videos. I think it's an objective area to short. You've got an uptrend line started on this gap, and it's just, this is a daily chart. We've just been walking up that trend. And we're backtesting that trend line from below. So that's resistance. That's the best you can do is take a short position at resistance and then manage the trade accordingly. If we break higher and it holds, you cover your short position. If it rejects, obviously you got the right position with the direction. And that's what I see. So to me, I think you have a higher probability that it breaks to the downside because of this negative divergence. We're backtesting with negative divergence. That's the best setup you can get is, run up into, at resistance with big negative divergence. That's a good clean setup. So I like it, and I think we drift lower. Tesla. Yeah. So I adjusted my trend line this week. I had this, I don't remember. I think I maybe had it on this data point here, but I adjusted it. I like this trend line. You've got lots of reactions right here. And as far as I can tell, we're still holding that trend. So I would just wait for a break of that trend. I think we're going to get it, but I'm not short Tesla. I shorted Tesla up in this area and caught this big move down, but I covered that short. Several of those shorts I was pointing out months ago, basically, They all worked out really well. They all played out for, anywhere from 20 to 40% gains. And I covered many of those, so that's why I haven't been going through a lot of those as much, because I'm not in those trades. But, I'm always looking for the next setup. This, to me, I think we're going to break to the downside. But, again, until I see something show up, it's still holding that support line. All right, let me see if I can scan a little bit more. Riot. So Riot is a Bitcoin proxy. I keep an eye on that one. This one kind of scares me. So the thing is with this one that I've noticed, let's say you normally take a $10,000 position, or everybody's got their own size, right? I mean, but let's say you take whatever you take, right? This one I would take a much smaller position. This thing frequently runs up and down 10% in a day, and it won't even be breaking a technical structure. So by technical structure, I mean, like right now I've got that as resistance and that as support. All right. If you look at the range from top to bottom, I mean, that would be a drop. That's 50%. All right. Or 46%. So we're right in the middle of the range right now. Top of the range, about 65. Bottom of the range, 34. Huge range. So, and it's just been bouncing between that range, in the middle of the range right now. So nothing going on with that one. Okay, so Space. All right, Space is another kind of retail mania stock. I hear about it a lot. Yeah, this thing, I've charted it, in the past. There's your trend line break. Obviously, that pretty much crashed. I mean, that's a drop of 55%. Yeah, I can look at the VIX. Yeah, all right, and then we got this trend line right here. So, maybe we could adjust that. When you get more data points, it's okay to adjust your trend lines. The more data you get, the more you'll be able to accurately chart a trend line. So that to me looks good now. You got 1, 2, 3, 4, 5, 6 tags. Looks pretty good to me. We don't need this one anymore. Holding that uptrend line. That's all I see. So until you break that, I think we're coming down to support. That would be support until or unless you break that. Momentum is down. Momentum's pretty much in the gutter. No negative divergence though. So yeah, I wouldn't want to short this unless I saw an impulsive breakdown. I would probably be more looking to the long side, down near support here. That's what I see on that one. Yeah, MJ. Yeah, that's if you're day trading MJ, it's you can manage it, but swing trading, again, I look to buy stocks when nobody's really interested in them and they're showing the signs that you're building strength or weakness depending on what direction we're looking at, and then we just sit and wait. And as long as the technicals continue to work and continue to confirm, then you just wait and the momentum shows up. That's how we do it. All right, what else do you guys got? MO, is that Alteria? Is that the tobacco one? Yeah, it is. MO. So I watch Philip Morris, but this one's very similar. This is like a spinoff, or maybe the other way around. This is going to be a low and slow kind of stock, but you've got upward momentum right there in the RSI daily, and you've got it in the PPO, and you've got it in price. Slight negative divergence starting to show up. If I zoom out, it's on the RSI right there. It's not really on the PPO. I mean, you know, right there, see that little lower high, and it was made on a higher high. So that is negative divergence. What you could watch, because this one's clearly uptrending, is probably this trend line right here. Until you get a break of that, this thing's just, you know, continues to uptrend. All right, what else do we got, guys? We'll go for a little bit longer, and then we're going to wrap up. Leave me a thumbs up. If you guys haven't done a thumbs up, I've got 100 viewers on here. Thank you for joining. I've got 32 likes. Let's get some more likes on here. You know, I continue to, you know, I'll continue to point out trade ideas that I see. And, you know, obviously when you know, I point out a trade idea, it's important to understand how to trade it. You know, you want to know how to manage risk, position sizing, all that. I teach that in my course. But you'll pick it up here on the channel as well. I just don't go into all the detail on how I actually take positions, and, you know, but I do point out profit levels and all that, of where to take profit. And I follow those levels myself. You know, I take profit on those levels. Let's see here. So I already covered energy, XLE. So XOM and XOP are, you know, proxies of that, basically. But again, I mean, I can look at XOM real quick if you want. Again, my spot to buy XOM, just to give you guys an idea, was right down here. Okay? This is where, basically right down in this area. That's where I was buying XOM. You go back to that time frame, you'll see I put out a video with said oil stocks. And I was talking about all the oil stocks and how they looked like a good buy. And, you know, so these ran. Now that we're up here, you know, you know, if you're long, depends on where you got long at. You know, if you just got in, I think you're late to the party. You know, so that's a higher risk. It doesn't mean it can't work out for you, and you might catch a little more upside. But the risk reward ratio, you know, isn't as good. All right. So I would be interested in maybe getting some sort of a pullback and then loading up on these things on a pullback. It's very similar to the gold stocks. And on XOM, you've got negative divergence. So we started the negative divergence right here. And this is all divergent high price action. See the RSI right there? Not quite on the PPO, though. So I kind of take it's mixed signals. Not the strongest short. You know, I wouldn't necessarily want to just short this thing. And with inflation and all that, you know, I mean, obviously that's a strong trend right now. Everybody's buying the inflation stuff. So this is not, you know, I wouldn't short this. But I would be interested in to see if we can get a pullback probably down to this level. It's very similar to XLE down here at about 49.50 or so. Maybe buy it right down. Maybe buy it down there. You have to see how the chart shapes up if you get down there. All right. That's all I got on that one. Gold going lower, dollar moving higher. Well, maybe. I mean, we can look at that. It's always possible. I mean, gold is, you know, I think gold's going higher, but gold has been moving lower in a downtrend, but downtrends don't last forever. And this is you know, just like gold, if you roll back out, sometimes you got to take a step back. Gold is in an uptrend. You know, this is up. All right, then you get a downward move, nice solid correction. That doesn't change the fact that this bigger move is up. Now, if you start to break down and start to get down in that area and break these levels, then you could say that it is in a downtrend. But as of right now, it's in an uptrend. You're making higher lows and higher highs, and we've been in correction. This is I was reading, you know, the Robinhood guys, GLD, I remember back here was one of the most traded ETFs back in this point in time. I remember hearing about it, and I thought that was interesting. But again, a lot of those guys are momentum traders, and so they're buying it. You know, they're loading up on it just as it's going parabolic, and that's not when I like to buy things. So I was selling into this, and they were, you know. So now after it's fallen and it's looked like it's in the gutter, yeah, it's in a downtrend. I'm looking to buy it, you know, down here. And I see bullish divergence showing up. I've talked about this. So there's your bullish divergence. It's clean and clear, and we're moving up. We did, you know, we're still struggling a little bit with this resistance level right here at 1750. So, you know, it's not gonna just punch through. Maybe we got to battle with that for a little more. So it could go down. You know, we could run down and make another new low. That's always possible. But the miners are all starting to break out. I mean, if you look at these miners, like this was the first one, HMY. Now this could be a false breakout, you know, but it is a breakout, and you always want to take a breakout for what it's worth until it proves you wrong. And I mean, like there's a breakout. So this one kind of showed up first. You know, if you bought this one down here in this kind of bullish divergence area, it's up, you know, it's up, what, 30% or so, 33%. And now I'm seeing signs like here's IM Gold. It's almost breaking out. Hasn't broke out yet. So maybe Monday we gap up. I don't know. BTG kind of starting to break out. So these are starting to break out. So that tells me the miners are front running the metal. And that's often the case. The miners often will front run the metal. If you think gold's going higher and you're early to a trade, do you buy the metal or do you lever up with the miners before everyone else can? You know, that's kind of what I see in that one. All right, moving off the miners. I've covered that one in detail on my videos. Lyft. Oh, yeah, let's look at that. All right, so I look at Uber. I don't have Lyft up. I don't have this one charted. Let me just take a look here. All right, so look at the momentum. There's clear negative divergence on the PPO. That's clean and clear negative divergence there in the PPO. And the RSI clearly has it as well. Sorry, it's basically right there. And so we've been making higher highs recently with negative divergence. So we look for our trend line, which is likely going to be something like that. Something like that. All right. So we haven't broken trend. I think we will break trend. The negative divergence is telling me. When I say I think we're going to break trend, that doesn't mean that we're going to just from this point fall down to the trend line and then break it. We could go higher and then come down to the trend line way up here. So there's no trade on this until you're down at the trend line and you start to break it. Until then, you know, if you're long, you could stay long. And if you're looking to short it, again, you got to wait for those conditions to line up. If it breaks, if or when it breaks, you got a gap down here, and that would be the target, is a gap fill. And that would be right there at $32. So that's a 50% drop from where we're at now. So again, no trade until or if you break it, and then it's not going to just plunge. It's going to kind of grind its way lower, and then maybe in a while it'll be down there. That's what I see on that one. Yeah, Vale or Volley. I think it's pronounced Volley. They do iron, I believe. That's a Brazilian iron miner. They're very similar to Rio Tinto. That's an inflation trade. It's likely, had a good run. Doesn't mean it can't continue for sure. All right, just a few more minutes. I'm going to wrap up. Someone asked me to cover the VIX. So the VIX has been selling off. I've been looking at it, and we were trading all of 2020 in an elevated VIX, and we've started to compress. So volatility is kind of coming out of the market, and that's likely why we're seeing this kind of grind higher, this day in and day out grind higher in the S&P 500. And that could continue for a little while. I'd probably be interested in maybe buying the VIX down here at 1160. Right now it's really in the middle of this range. I kind of see it as resistance up here at about 22, support down here at 11, and we're in the middle. So for me, it's a no touch in the middle. I don't buy anything in the middle of a range. I'd be looking to either, potentially short it up here at resistance or go long down here. That's all I see on the VIX for right now. And you can't buy the VIX directly. You have to buy it with like VXX or UVXY. So I would wait for the VIX to get around a level, and then I'd start looking at one of those, those the volatility proxies. Yeah, well, the parabolic melt up that maybe we're gonna get, doesn't have to be on high volume. Could be on, short covering, low volume. You could have shorts covering. You could have retail buying call options. They probably would do that into a melt up. And you're going to have, if you buy call options, you're going to have the market makers buying stock to, because the market maker wants to have a flat position. They don't want to be long. They don't want to be short. They want to make money on the spread, right? On the transactions. So, they'll buy, if you buy calls, you're going to make money if the market goes up. They have to buy stock, more stock, so that the money that they're, that you're making comes from them. They have to make money with that. So they want to be flat. Cool. BTG and IM Gold. I own those too. So far, they're, starting to work out. I don't remember how much IM Gold is up. I'm definitely up on that one. I'd have to open my my trading platform doesn't work on the weekends because I have a direct connection to the exchanges. If anybody's interested, I use Lightspeed Desktop Trader. There's certain criteria to get that platform, but it's just a fast execution platform, and it has a direct connection to the exchanges, so I can route my orders to the exchange that I want to. 3D stocks. Yeah, I don't know. Mara is another one of those mania stocks. I don't even know what they do. Yeah, it's some COVID stock, basically. Yeah, I'll look at this one. So we got history going back to 2012. Yeah, so you see this broke. See the negative divergence right there? That's really the key clear negative divergence. And that was your divergent high right up in here. And so we broke trend. There's your break. It's not that impulsive though. And because it's not that impulsive, it's been a battle. It doesn't want to break down yet. And so there's some support. This one, they stepped in a little early, but you can see we held that date right there. There's your support. And, kind of backtesting-ish. On this one, what's this range? Down to here. Yeah, it's a big range, 42%. So on a big range like that, you usually have to tighten it up and look at the hourly if you want to trade it because, by the time you actually get down to maybe a daily range, it's already fell 42%. So on this one, there's your hourly range. I'd look for the break of that. We already got that break and clearly, so I think we go lower, in this. I think it's probably going to work its way down over time, back down to this area. Yeah, and then if you look at the hourly, there's your negative divergence right there. You made it kind of an equal high on the momentum, but it was on much higher price. That's your divergent high. Look for a break of trend. Broke trend here. Down she goes. So, now it's chopping around. You're kind of consolidating, you go through these little battle zones, as things kind of work their way lower. But I think it's going to trend lower. All right, I'm going to do one more, then I'm going to wrap. What's a good one? Barrick Gold. I've been covering that a bunch in a lot of my videos. I like Barrick Gold. I'm loaded up on it. It's been working out. I think it's up 10% in the last couple a little while. But you can watch my video for that one. Oh, is Mara tied to Bitcoin? I didn't realize that. Is it? It's a Bitcoin proxy. Okay. Well, yeah. I've covered Bitcoin, and I don't trade Bitcoin. I'm just not really interested in going through Coinbase and buying and selling it. But I'll trade a proxy of it, Riot or whatnot. I'll trade a stock proxy. But there's Bitcoin. You look at the daily, and it's an uptrend. That trend hasn't been broken. It does have big negative divergence, so that's been building. I'd wait for a break of this trend line. I don't know when it comes, but when you get it, could be a good downside trade in whatever proxy you're looking at. What else you guys got? What, Home Depot? All right, I'm going to do Home Depot and QuantumScape. I think that's what QS, I think that's what they're talking about. And then we'll wrap. All right, Home Depot. And guys, leave me a thumbs up. I appreciate that if you haven't done so. Helps the channel. And, I started this channel a couple years ago just to get some of these thoughts that I'm seeing in the market off my mind. Just a way to kind of clear my mind of what I'm seeing. And that's really what this channel's been about, is just I look at charts and I look at stocks a lot. And I'm obviously involved in trading a bunch. And so when you're so involved in it, it helps to have someone to talk with it about, and that's what you guys are, is, my springboard. My wife doesn't want to hear that stuff. So, all right, here's Home Depot. That's a nice trending move right there on the daily, isn't it? That's crazy. Don't have to sweat that one at all. So this one, obviously you got this uptrend. Let me see. I got to go to the hourly to get this fine-tuned. Man, that's looks like algos have just been in there. That's probably what I got on that one. Clean uptrend. We broke trend, but not impulsive. Looks like we're back testing. So what I would do, rather than just take a position on a back test, because we didn't get any impulsive breakdown, I would probably create a secondary trend line, something like this, and wait for a break of that. But do we want to short this? That's the other thing. There's obviously a trend, but let's see what we got in momentum. Going back to the daily. No. I wouldn't short this right now because, look, you don't have any negative divergence. So it's bullish momentum, bullish price action. That's all I see in that one. Rolling out to the longer term. There's your longer term bull trend. We could come back into that, but I don't see anything right now that tells me to short it. You don't have to have negative divergence for something to go down, but why short something when you don't have a good setup? Shorting. When you're shorting, you're always going against the crowd, right? Because you're not 401ks aren't shorting, and that's why short positions, when they work usually pretty quickly and for big gains. So why short something if you don't have a good setup? And I just don't see the setup on that one. QuantumScape. But the home builders on the other, I'm going to go through Lennar too. We'll look at that one real quick because I am short that. And then I'm going to wrap. All right, QuantumScape. This was a mania stock. I know about this one because people back here when it was running were just giddy about it. And then it just gapped down on them, right there. I remember that big gap. That gap right there that's 30% drop. That's pretty nasty. And people don't buy these things, they don't usually. They buy these things when they've run really hard and they think they're gonna get rich because everybody else has. That's just not how it works. The early money gets rich. The late money are the bag holders. All right, so on this one. That was a bullish. That was a divergent low. This little drop right here, that was on higher momentum. And so you could say we have bullish divergence on the RSI and the PPO. I would look for some sort of a bullish break higher. Otherwise, I wouldn't be interested in this one. And you've got some support. Looks like we're putting in a support shelf right in this area. Right about there. Okay. And, you know, so 40.50 is support. And then resistance looks like it's right up in this area, about $60 or so. We're in the middle of the range, so I wouldn't be interested. But up around one of these levels, you got to see how it acts and what's going on with the momentum indicators. All right, last one, Lennar. All right, so Lennar is going to do one of two things. We've either got a false breakdown or a bear trap, or we have a back test of resistance. If you look at the hourly, there's your bearish rising wedge. That's a clean bearish rising wedge. Usually when something's so clean, it makes me a little suspicious because it's just too obvious. But again, got to take it on face value. And look, we broke. We're back testing. Technically, we haven't recovered or anything like that. So this is just, you know, this is the area where you would short at. Next, you've got, you know, here's your daily negative divergence on the daily. I want to see this PPO turn down to help confirm this negative divergence. But it did turn down here on the RSI. So again, I'd like to see it turn down. That will likely come with a rejection right here at resistance. So again, it's an objective area to short this thing. Doesn't mean it's going to work out. We could be in a bear trap, you know, and we'll know. But again, when you're in a bear trap, usually you know, and you're wrong small, right? That's the key, right? We want to be wrong small. So if we gap up on Monday, which is possible, you know, I wouldn't just exit right on the open. I'd want to see how that behaves. You know, if they gap up, maybe we gap up to this 107.50 area. Do they sell it down, or does it gap up, hold, and then continue to bid higher? If you see that, I exit. All right, I'll cut the short. I'll cover the short. But if it gaps up and sells off, that's just more confirmation that that move, that gap up is a stop rate. It's going to run some stops, and then they're going to sell it down. That's very similar to what happened in Qualcomm before it sold down, you know, 30, 40% or whatever it fell. And so, again, when we're at this level and it's very obvious, we might see some games played next week where they're going to gap up and then sell it down, things like that. It's all about how that behaves when if you get the gap up. Another thing that could happen is you could get gap down. You know, we could just we're at resistance. Monday opens up, you gap down, and you sell off. That's what whether it gaps up, I put higher probability that we move down, whether we go up first and then move down or just gap down. And that just comes from the negative divergence right there on the RSI and the PPO. My first profit target on this thing is about $92. No, $93. That's really my only profit target, actually, that I have on this for now. We do have some support all the way down here. That's your major level of support right there at 71. See all the reactions, lots of reactions around that level. So if this is going to continue to downtrend, probably get a reaction here at 93, and then we could roll over and run, head down to 70 over time. It's going to take time, and that would be a drop of 30%. That would be my final profit target, if it was going to get down there. That's all I got, guys. I really appreciate it. Thanks for joining. And, I try to do these every Saturday. Sometimes I don't feel like it, but I will catch you guys next week. Bye.